Welcome to Momentum Monday. Today is Sunday, April 21st.
Welcome, Ivanka Hoff. What do you think? Has anybody called you that before?
Not yet.
Well, now you have.
Yeah.
When I'm in a bad mood, I'm gonna call you Ivanka Hoff.
How many sleeping pills did you take before the show?
I just took an Ambien. So if I doze off, will you close the show?
Sure.
I had a tough week. But I think I can tell this is going to be big. This could be bigger than Gary Shandling. I mean, Ivanka Hoff. You're like Bulgarian. You could. I mean, you're a good-looking guy. You could marry a woman like Ivanka. Okay, let's get to it, Ivan. Let's start with the S&P. Go get to it.
All right. Let's share my screen.
Ooh, and let's start with the Nasdaq. All-time highs. That's Nasdaq 100.
Yes, basically new all-time highs.
We'll go through why. I mean, Microsoft, Apple.
There's definitely
Google's on the verge. Boy, Microsoft, wow.
Yeah, Microsoft definitely leading. Google is breaking out.
Not quite, but like relative strength 81.
It's rising.
It's rising. Yeah, it's one of the stronger fangs. And then Apple back about near $1 trillion.
Yes.
Yes, I remember when that was on its way to 100.
I'm also looking very constructively here.
Yeah. So the Nasdaq 100's done it without the well, it's done it with Microsoft, but it's really just on the backs of software.
On the backs of the 5-6 biggest companies.
Well, no, only Microsoft's hit all-time highs, so it's really some new leadership underneath the surface.
Yeah, I mean, you can say so. I mean, software has been strong.
Ivanka Hoff, I say so. So let's get right to some ideas that you have.
Oh, I think in the past week or so, we're starting to see a very interesting sector rotation.
Okay.
And it might has to do with the beginning of the new earnings season.
Okay.
Things kicked off with JP Morgan, which managed to blast through its 200-day moving average. And last week, it followed through. And other financials are also, I mean, they're not acting amazing, but definitely better than compared to the previous few earnings season.
Yeah.
And we're also seeing rotation into many of the other so-called old economy sectors, like manufacturing, like transportation. They're definitely acting better than the rest of the market, especially last week. We saw quite a few breakouts in industrials.
That's the industrials.
And positive price action in transportation, in home builders as well. So the old economy sectors are making a comeback. I don't know how long it'll last, but in the meantime, we're seeing a serious outflow from biotech and healthcare, and also let me first show the.
Yeah, that biotech, that's a risk-off move, man. That was a lot of weakness. I mean, luckily I don't care about that, but that's a risk-off. I mean, what's taken on? There's crypto. I mean, they kind of been going sideways since they peaked back in 2015, but that's an ugly break, especially in a strong market. Okay, so risk-off there, and then the XLV, which is healthcare.
Oh yes, XLV. Pretty serious damage in the past week on sell-off on a big volume.
36 raw. So I don't know what's in. Is that Medtronic? I'm trying to think what's in healthcare. Is that could be government related? I don't know. I don't follow the industry that well.
Yeah, we have to check it out what the components are, and also, I mean, the first few software companies to report were
yeah, the team and Checkpoint. They both kind of got slaughtered, and I was.
They got slaughtered, which is for me it's it's kind of warning sign when momentum stocks, when super hot momentum stocks start to break down on earnings.
Mm-hmm.
And
or after earnings.
Because starting this week, we start to see a lot of tech companies reporting.
Yeah, PayPal reports this week.
Yeah, and Netflix also reported last week. I mean, the earnings were kind of non-event. You can definitely make the argument that they correct the estimates, but then, as usual, they were very shy about guiding.
Mm-hmm.
And but it didn't sell off at all. It basically finished the week where it started, and from a longer term perspective, it's kind of looking bullish.
Yeah, it's digesting massive gains the last 11 months. So it's not bearish.
Yeah, and the good thing is that Disney is holding the gap, and it's even trying to follow.
Probably my favorite idea. I've shared it with the subscribers why, but they just have too powerful a combination at that price not to be probably bigger than Netflix over 10 years. It's just too much content and too good at making 5 to 10 movies a year that everybody will pay for. I'm surprised they went that low, but they'll probably have different tiers. And then they bought back their Hulu. I think their strategy is the winning strategy because they have the cash flow from the theme parks to fund. Anyways, I just think, I just think that stock can double from here. That's my big idea. There's some other great ideas that I've been sharing with the market wisdom people, but I think the biggest question I have is fintech. I know JP Morgan's breaking up, but if we look at in the US, it's PayPal, MasterCard, Visa. Those are the three dominant ones. I think you're going to see, yeah, you can see if we pull up MasterCard also hit all-time highs. I think, Ivan, what we could see after watching the action in Square, I'm watching Square pretty closely, not that I own it, but I'd see that breakdown and it kind of makes sense to me, right? They're riding on the rails of MasterCard and Visa in the US. And you can see the divergence now. I mean, they definitely had a great run, and maybe this sideways action means nothing. It's down about 30% from all-time highs, with the CEO that has two pretty big jobs. But if we look at the action, these are not high margin businesses. A certain part of their business is high margin, but basically they're in the lending and low margin business. So I think, and we saw it in Latin America with my favorite idea, STNE, which is the darling of Latin America. And if we go into a shorter term, we can see that breakout, Ivan, if you circle in March where we took that position, breaking out from a base, strong IPO, strong sector, you rarely see something happen like this. Now, this is a young stock, but you rarely see that kind of breakout, especially on earnings. They went from 13 cents to $1.15 over the last 4 years. So boom, it breaks out and then just craters, forgetting, you can blame it on competitors, you can blame it on low margins, but 3 weeks ago, the market loved the numbers. So that is a big tell for me. Now, granted, that's a foreign stock, but if I look at PayPal coming up and I see the action in Square, and you realize that it's, they're all beholden to MasterCard and Visa right now. And then in the back end, you see JP Morgan break out. So you hate seeing Darth Vader come on strong here. And then you see Bitcoin starting to rally a bit. So really, I think long-term fintech play still may be Bitcoin, for the really aggressive. You're going to pull up the ETF, which I don't recommend, but it's the simpleton way to kind of trade this if you don't want to open up a crypto account. What was this down like 90%? You know, I feel like in fintech things have gotten so overheated, and in North America we're so reliant on Visa and MasterCard still, that you could see a big divergence happening in a lot of this fintech when people realize, shit, these are kind of like Spotify type companies, where only a few of these massive fintechs will make it to the next level, and we may see more risk on in the crypto space. Okay, so there's that. Let's go to your market wisdom page. There's a lot of new names. Just going to go through a few of them. I think that the most interesting is, not to me, but like you can see, like with Proofpoint and with some of these staffing companies, with the economy is in good a shape as it is, at least headlines. It makes sense that these staffing companies are doing well because there's zero unemployment, so everybody needs talent. And I don't like these stocks because they're kind of economy based, but you can see kind of that's a great base, and for traders, I mean, it's setting up. But again, these are what you think you should see, and as when the economy is strong and there's lack of talent out there for the jobs. Obviously, Lululemon, I'm excited to see that number one on our list, been long forever, and it's it's just setting up again. They're just between Nike, the fashionology trend continues with Nike and Lulu just kind of dominate. I think Nike hit all-time highs as well, Ivan.
Yeah, and did you know that Lululemon also has a similar program to Amazon Prime, where you pay like an annual fee and then you get access to special perks? I learned that last week. I had no idea.
Yeah, I didn't know that. I know in New York, I walked into, they have now a very high fashion Lulu store in Soho. I forget what they call it, like Nike already, where they like have weird concept type products in the Lulu store, and they're shutting down smaller stores in New York to open bigger stores in New York, which I think is, retail's a tough business, but I think it just goes to show that they're streamlining and thinking about expanding the product line at Lulu. So are you saying Nike had that or Lulu?
Lululemon.
Any ideas stand out to you?
For next week, I think I'm the most excited about the price action in Chinese stocks. Granted, there is a lot of headline risk involved, and they're just one headline, one tweet away from dropping 10%. But just based on pure price action, I think when we look at that, we have three week especially the last two tight range closes here, and that's a very bullish setup in general. And you can see that, first of all, CQQQ, that's an ETF covering Chinese tech stocks. Mm-hmm. And if you look under the surface of that ETF, you see similar setups in many individual stocks. I'm not going to go over all of them. I shared some ideas on Market Wisdom with subscribers, but here's Alibaba, and there are quite a few others. Just if you're looking for good ideas, especially on a weekly time frame, which is longer term time frame, I think you'll find quite a few in China. And again, there is more risk involved, so I think people should go with a smaller position size on this.
Mm-hmm. Yeah, I mean, earnings this month, I'm going to keep it light this month. And early indications are volatility, at least in the tech names so far. But, with Microsoft hitting on all cylinders and Google at or near all-time highs with so many, if I look at Google, they have so many levers to pull. And I'm just super bullish on Maps, and just their core YouTube and search products. And that's kind of just been going, in the 10-15%. I think there's a big run out there. I want to see it get through earnings here. You may have to pay up a little more. I've been long for a while, but you may have to pay up more to see the proof that the market likes big cap tech. Microsoft stayed out of trouble. Google seems to have stayed. It's the companies that are the big caps that are staying out of the news. Microsoft and Google have been the ones that have broken out here. And so I think more of the same. I think if Google can deliver a good number, then off to the races for them. And I don't know what stops Microsoft at this point. Between they really are an 8 to 80 brand with Minecraft, for kids, and the enterprise business seems to be humming along. Okay, I'm gonna call it off there. It's Sunday late. Hope this helps people, and Ivan will see you next week.
Yeah, absolutely.
Okay, buddy.
All right.